Mr. Calhoun, we've heard about the Federal Trade Commission being a very effective regulator. It's my impression that they are a regulator of mortgage brokers, and we had a period in which brokers engaged in both receiving steering payments or bonuses for steering families into predatory loans when they qualified for prime loans. The liar loans developed, in which the loans weren't underwritten and the numbers were often fictionalized. We had the teaser rates with families being locked in by the prepayment penalties. So where was the FTC through all this? Why didn't the FTC end these practices?
I think you saw a variety of influences, and they are ones that have been proposed today for the CFPB that in fact handcuff the FTC and would in turn handcuff the Consumer Bureau. For one, there was repeated deadlock on the commission, on the FTC commission, as has been, I think, widely acknowledged. There's been a general challenge with the confirmation process, not just of the CFPB, but across the board. And this body has been looking at ways to improve that. But that raises concerns with 5 members. But the CFPB had authority, but was unable to use it because of that deadlock. They also...
The Trade Commission?
The Trade Commission, excuse me. And in fact, we saw this appropriations process again, and this is a concern we have. HUD also had authority over mortgage brokers, and in the 1990s moved to try to limit these kickbacks that brokers got for put people in the 228 loans that blew up the economy. There were appropriation riders put on HUD's budget to dissuade them from moving in that direction, and they backed off. And that was a direct contributing cause to our ultimate crisis. So those are the concerns we have. Those agencies were not effective. You look at the absence of rulemaking or enforcement actions are really stark at the FTC and with HUD during the crisis as well.
Thank you, Mr. Calhoun. Mr. Levitin, we heard that the OCC objected to the Fed's mild credit card reforms. You might recall that we had issues like companies creating remote post offices so that payments were late, changing the number of days each month so that the consumer, when they did their regular payment, turned out they were late. A whole series of clever actions designed to run up fees. Why did the OCC object to such mild considerations?
Because the OCC was concerned that it would affect the short-term profitability of banks.
So here is kind of an interesting puzzle, and that is, it appears that under the argument to protect short-term profitability, long-term structural problems were allowed to emerge, and that families' personal finances were undermined, making them weaker, and ultimately we ended up with mortgage practices that were turned into securities that carried the flaws of the mortgages into the securities and blew up our entire system. Why was the short-term profitability put over the long-term soundness of our system under the argument of soundness?
I think a lot of that has to do with the competition for charters among bank regulators, that banks can shop for their regulator, and that has some real serious consequences. Mr. Calhoun spoke about it earlier in his dialogue with, I think, Senator Corker, about how the ability to shop for charters has created a race to the bottom in bank regulation, and that the OCC, for example, gets its budget from appropriations, not from the appropriations process, but rather from fees that it charges to the banks that it charters. And if it wants to have a larger budget, it has to charter more banks. And how's it going to get more banks? Well, it's going to offer more favorable regulation, not necessarily better regulation, just regulation that the banks like more. And that means less regulation.
So, Mr. Isdale, thank you very much. You mentioned the Military Lending Act and the fact that there's loopholes in it, or that a lot of the pieces aren't being effectively regulated. Who is the regulator for that, and how do we fix these loopholes? Is it a regulator issue?
It is a regulator issue. Thank you. I believe it is a regulator issue, and the regulations that were provided were narrowed the products that were covered and the businesses that were covered so greatly that there are very, very few products that are actually covered. And it's very easy for any type of lender, institutional or otherwise, to create a loan product that's 92 days as opposed to 90 days to completely allow it to avoid regulation altogether. The Department of Defense is the actual entity that regulates the Military Lending Act, and as you can well imagine, the Department of Defense has an awful lot of other matters on its mind rather than regulating financial industries.
Thank you. My time has expired, Mr. Chair, but I just want to note that as we look into the details, we find that HUD's efforts were stymied, the FTC efforts were stymied, the Fed's efforts never materialized because of their pursuit of the safety and soundness side. DOD is limited in their enforcement. I mean, there so many of these issues that started with fairness to consumers ended up to be huge systemic risks. And I think it helps us to understand why the CFTB is such an important institution.